Namaste, dear students. How are you all? Hope you people are doing good and your family as well. So, we have successfully completed 2 units. Number 1 was accounting for general insurance, and number 2 was accounting for life insurance. So, today I'm going to start unit 3. So, that is accounting for holding company. Unit 3. So the name of the unit is Accounting for Holding Company. Accounting for Holding Company. So this is the next unit which I am starting with. So here you should understand a few theoretical aspect of this lesson. Then only we can start the practical problems and solution of this, because the terminologies we use, that you should understand, then only that will help you out while solving the problem. So first let us understand what do you mean by a holding company. What do you mean by holding company? So first you write down, then I will explain the same. So meaning of holding company is write down, according to the accounting standards, 21 issued by the Institute of Chartered Accounts of India, a parent or holding company is an enterprise or company that is controlled wholly means completely, or partially is partly, wholly or partially by another company known as the parent company. See, it is very clear. You have to understand that a parent or holding company is an enterprise. It can be an enterprise or it can be a company which will control wholly or partly another company. Clear? So that will be controlled by wholly or partly by another company. So the company which controls is called as parent company. Clear? The company which controls is called as parent company, and the company which is get controlled is called holding company. Clear? It can be completely wholly controlled by a parent company, or it can be partial, only management controlling, or only administration controlling. Clear? So that is called partial controlling. Okay. So as per the Company Act, let us understand, as per the Companies Act, as per the Companies Act 1956, a holding company, a holding company is a company which holds more than which holds more than 50% more than 50% of the nominal more than 50% of the nominal value of the equity shares of another company. That means a holding company which holds, parent company I am speaking about, a company which holds more than 50% of the nominal value of equity shares of another company. When a company has more than 50% of nominal value of another company's equity shares, that company will become a parent company or holding company. That is what we call it as. Okay, so that is a very most important point which you should keep it in your mind. Clear? So that the nominal value of more than 50% of equity shares of another company, or which exercise or controls more than 50% of the total voting rights of a company, or which controls the composition of the board of directors of another company. So that means 50%, more than 50% of voting rights. So when you will get more than 50% of voting rights of another company, so when you get this, you will get when you invest in that company more than 50%, then only, or board of directors they say. So that is also happens only when you have invested more, in such kind of company. Okay, so let us speak about the advantages and disadvantages part of holding company. Advantages of holding companies. So number one advantage is that maintaining goodwill. So what is this maintaining goodwill? See, when a company gets holded by some other company, so that parent company's goodwill will be automatically shifted to the other company. Clear? So that is the biggest advantage, that all that company, subsidiary company, will get the goodwill of the holding company. Clear? See, it is very simple. Subsidiary companies maintain their goodwill due to having separate identity separate identities. So here the company will have separate identification. So now you all know that WhatsApp is a separate company, and Facebook is a separate company, and many of you don't know that now these two companies are together, WhatsApp and Facebook. They have collaborated. But still, WhatsApp will work with WhatsApp logo and Facebook will work with the Facebook logo, because they two of them have separate identities. So their goodwill they will carry forward. WhatsApp will have its goodwill separately, and Facebook will have its goodwill separately. So it cannot be merged together. Second point, we can say separate accounts. Separate account. So what is this separate account is all about? Very simple. All the accounts are maintained separately. So that is subsidiary companies maintain separate accounts, separate identities, which make it possible to carry forward losses, if any losses, for income tax purpose. Income tax purpose. Because see, one company is making profit and another is going under loss. So when you maintain separate accounts, so that income tax filing of income tax, so you will get show that one company is under loss. So for that purpose we can maintain separate accounts. Next is economic value. Economic value. That is, holding company may be able to serve economists in production and management. So that is third point. So now we are shifting to the fourth point. So point number 4. Elimination of competition. elimination of competition. Elimination of competition. So what is this elimination of competition? See, when holding company itself managing or controlling both the companies, so there will be no fight between the two companies, or there will be no competition between the two companies, because parent company is same for the both the companies. So two different companies comes under one single company. Okay, so that can be avoided easily. Okay, holding company manages holding company manages and control both the company. Hence there is no hence there is no elements of competition between the two companies. Okay, next is point number 5, other benefits. What are all other benefits they will get as a holding and subsidiary company? So number 1, smooth supply of raw materials. Because both of the companies are operating separately, so they don't get together for raw materials, so that will be executed smoothly. Then smooth running of business, because both of them are separately running, so smooth running of business. So since they separately operate and separately execute their plans. Then pooling of resources whenever needed. Pooling, that means getting the resources. So using of resources. Pooling of resources whenever needed is possible. Then getting an assured market. So these are all the major benefits of holding companies. That is advantages. Clear? So now let us speak about disadvantages part. So that is also equally important, right? So disadvantages of holding company. Disadvantages of holding companies. So under disadvantages, number 1, manipulation of accounts. Manipulation of accounts. So what is this manipulation? That is nothing but fraudulent manipulation is possible, because both the companies are separately operating. So if you take an example of a Satyam company, so which they went with all accounting scam. So they showed all fake accounts reports. So if you refer as a case study, it will be very good. Satyam company, so which did so manipulation of accounting. So with respect to that, fraudulent, that is wrong accounting statements can be shown. Fraudulent manipulation of accounts is possible if the accounts of various companies are made on different dates. So this is a major disadvantage of this holding company. Second one, financial position. So what is this financial position about? See, usually the creditors and shareholders, they are outsiders. They might not aware of the true exact financial position of the subsidiary companies, because the accounts are maintained separately, it is operated separately, so they might not get to know the actual financial position of the company. Okay, so that is second disadvantages. The creditors, outsiders, and shareholders may not be aware of true financial position of subsidiary companies. Okay, so next disadvantage is difficulties in revaluation of stock. So that is difficulties in revaluation of stock. So why it is difficult to do the revaluation of stock? Because revaluing stock, it consists of huge quantities of intercompanies, because two different companies will have a huge stock, so that might be mixed up, so that create a problem over here. Okay, so difficulty may be faced for revaluing stock where it consists of huge quantities of intercompany goods. So this is another disadvantage of the company. So next is fourth point, That is, the directors might force the company to appoint people. So we can say that forced appointment, forced appointment of directors, forced appointment of directors. Okay, so the subsidiary company may be forced to appoint persons or directors of the choice of holding company, because holding company might decide so who should be the coming director, what he is going to do. So that is okay. So these are all the major disadvantages of the company. Okay, so that is holding company meaning, advantages and disadvantages we are done with. So let us continue further. That is meaning of subsidiary company. What do you mean by subsidiary company? So that also you should know. Subsidiary company. A simple answer for this: the company which is held by another company is called subsidiary company, or the control of the company is given to another company is called holding company. Okay, so let us look into it. The company which controlled by the holding company is known as subsidiary company. A subsidiary is an enterprise that is controlled by another enterprise known as parent company. So a subsidiary company is a wholly or partially by another company. Okay, so this is what we call it as a subsidiary company. So next we will understand meaning of group. What is this group? See, it is just both holding and subsidiary company are collectively called as group, collectively called as group. Okay, so that is what a group. So next is meaning of group accounts. Meaning of group accounts. So what do you mean by group accounts? So that is, it refers to the financial financial statement of a group. In other words, group accounts means the consolidated means together financial statement of holding and subsidiary company. Okay, so put together, like holding company, subsidiary company, both accounts, when you present the consolidated report of both the companies, is exactly, we call it as a consolidated financial statement, we call it as a group accounts. So here you have to understand a few advantages are there by presenting this kind of accounts. Advantages of consolidated financial statements. What are the advantages we get when we prepare a consolidated statement? Number one is a copy of the balance sheet. The copy of the balance sheet of the subsidiary. Second one, a copy of the profit and loss account. Of the subsidiary. Next is a copy of the report of the board of directors of the subsidiary. Next, a copy of the auditors report of the subsidiary. Next is a statement indicating the extent of the holding companies company's interest in the subsidiary at the end of the accounting year of the subsidiary will be prepared in consolidated way with holding company. So every aspect of the accounts is covered, and that will be recorded with the holding company accounts. Okay, fine. So now let us understand the features of consolidated financial statements. Features of consolidated financial statements. Features of consolidated financial statements. What are all the major features? So number one, that is accounting standard 21 comes into effect in respect of accounting periods. Commencing on or after 1/4/2001. So that is first feature. Second one, the objectives of accounting standard 21 is to lay down principles and procedures for preparations and presentations. Of consolidated financial statements. Next, number 3, the consolidated financial statements. The consolidated financial statements, in addition to its separate financial statements. It's a separate financial statements. Financial statements. Next point 4. The reasons for not consolidating a subsidiary should be disclosed in consolidated financial statement. So why they have not done the consolidated report? They should disclose the reason. Next is 5th one. In the consolidated financial statements, such subsidiaries should be accounted for investments in accordance with accounting standard 13, accounting for investments. So these are the major features. So that is 5 features I have written. So 6th one, it is not possible to use uniform accounting policies in preparing the consolidated financial statements. So these are all the major features. If he asks for 5 marks, so you have to write this much of answer for the features of consolidated financial statements. Okay, so is that clear to all? Yes. So let us move further. Little more theory part we have, so we will finish it off maybe in the next class. Now we'll stop here, so we'll continue in the next session with little more theory part. Then we will start up the problems. Okay, so I'll come back very soon with the next video about accounting for holding companies. Till then, take care. See you soon. Bye bye. Stay safe, stay home, take care of yourself and your family members. Bye bye.